Hi, this is Cynthia Ratliff Buford with Berkshire Hathaway Home Services, Florida Network Realty. I'm sitting here today with Loran Whigham from Prosperity Home Mortgage, who's going to answer some questions for us about buying a home and maybe answer some questions about some of the loan products that they offer. So Loran, you're one of our affiliates, and I'm super excited because I get to speak with you quite often. But for the people who are watching, who maybe have never spoke with you before, can you tell me a little bit? How long have you been in the business? Why do you do what you do?
So I have been in the mortgage business now for 15 years, and I started in the mortgage business as a temporary employee. Actually, I was helping with the appraisal desk, so I worked my way up. And 15 years later, I am a loan originator, and I help folks with their dream of buying a home and helping them with all the things that they need to do to get there, the process and all of those things. So I enjoy my job. I like working with the agent. I like working with the buyer. I like to work the numbers. So I find it
That's
very
awesome.
fascinating what I do, and I like it, and I like to help people most of all.
Yeah, that's awesome. So, can you tell me a little bit for those that are watching that don't know what that means? What is a loan originator? What do you do?
So, a loan originator is somebody that's going to help you with getting the money in place to help you finance your home. So, that's a mortgage. When you need to borrow money to mortgage a home and buy a home. And so, that's what I do. I create the loan based on your needs and what is financially suiting to you and give you your options. And then we build that loan together and we structure it to your comfort level, making sure that you understand the monthly payment, what your cash to close might be, and we base that all around your one specific situation. So, a loan originator is someone that's going to originate that loan, give you your options, structure it to your liking, and just kind of walk you through that process until we close on that home. And that's when we wire the money to closing, and you get the keys. So,
Wonderful.
yeah,
Yeah, how exciting is that?
it is.
Yeah. So tell me a little bit more about, you said that you build the loan to their specific needs. So, what types of loans are out there when you're talking about specific needs? What if I've actually heard a lot of conversation lately about interest rates, of course. So, what can I do to keep interest rates down? Is there a loan that can help me with that? What are some of my options?
Right. So when it comes to lending, there are a lot of options, which is a good thing because there's so many of us in different places with our lives, our savings, our credit scores. If we are a veteran, if we are not a veteran, if we're buying our first house, if we're buying our dream house. So there's many loans that are out there that kind of are little options that will fit your need. And that's what we do is we analyze your information and we give you those loan options, and we structure that to the way you want your payments to be, and what you have available for closing.
That's awesome. Speaking about credit scores,
Mhm.
what's a good credit score to buy a house? Do I have to have perfect credit?
I would say the most important thing when it comes to credit score is reality, right? To know your credit score. And if you seriously are wanting to buy a home, it's my best advice to get with a loan originator who can pull a mortgage credit pull, which will give you your three credit scores. So you've got an Experian credit score, a TransUnion credit score, and an Equifax score. And all three of those scores will be pulled, and we go by the middle of those three scores. And what we do with that credit score is we price out interest rates while we're building that loan. And so based on credit score, that's going to change the rate based on down payment. But the credit scores that we need to focus on are going to be, we will go as low as 580 on a VA and an FHA loan. They really want you to have a 600 so that you don't have to fulfill the other kind of needs there. But we do offer that. So it's 600 is good. And then for the first time home buyer bond loans, they're going to want you to be at a 640.
Okay. So when you're talking about the credit scores, what if I'm a little bit shy? Let's say I'm at like 620 or 630. Is there an option? Is there any way that I can still get a home loan or
Sure.
qualify?
Yeah, so there are a lot of times that people want to increase their credit score when I'm talking to them. And sometimes that is to get a better interest rate, or sometimes it's to get them into the loan program that they need. So if we have somebody that's maybe shooting for the bond program where we need a 640 and we're shy of that score, then what I'll do is I will take that credit report, and they call it credit expert. But basically, what I do is we run a full review on the credit report. We want to look and see, why that credit score is just a little bit low, and what we can do to just get it up, those maybe 10, 20 points, sometimes 100 points. So we work with a lot of different credit scores. And we work for different amounts of time, right? So maybe 10 points for credit score might be, a quick change. We could see a change in 30 days, maybe 2 weeks. But if it's a little bit further out, then we may be a little bit longer out. So every different scenario is going to require a little bit of a different, remedy to that score. But we can do the review. We can give you step by step of what you should do to get that score up and kind of a timeline that you can expect to see that change.
Oh, that's great. That really is. And I heard you mention the Florida bond. Can you tell me a little bit more about that? What is that?
Yes, so the state of Florida offers a Florida, they call it the Florida Bond Program. And if you are a first time home buyer, you can take advantage of that. To be a first time home buyer, you wouldn't have had any ownership in a home in the last 3 years. And the bond program helps you with down payment assistance. It's kind of a mix and match program, if you will. So there are many different options. Again, the credit score needs to be 640, but within that program, you can get down payment assistance of 3% of the sale price, 4%, 5%. You can get $10,000 with that bond program. So there are income limits as well. So with each of those programs, there's going to be different requirements. But it is a very good option for people that want to take advantage of that and that can take advantage of that.
That's wonderful.
Yeah.
Are there some other options too? Like, what if I don't qualify? Maybe my income is too high or something else. What if I don't qualify for that? Do you have some other options for buying a home without a down payment?
Well, we do. So the bond loan is, they do have their own requirements. We at Prosperity have an FHA no down payment loan. And of course, it does have requirements as well, but that's something that we do in house. And it is a great loan as well. So basically, what we do is we give a percentage of the down payment to help the buyer with the down payment or their closing costs.
That's great. That's great. And I know that the USDA also has a loan that is no down payment. Can you talk a little bit about that? Just
Sure. Yeah, USDA is also a great program. It's going to be in your rural areas, but we know now rural areas is pretty much suburban, and everybody lives everywhere and commutes a lot. So USDA loans are pretty big. You're going to have income limits there as well. So just be mindful of that. But they have a great website that you can Google, USDA. And then if you think the property may be eligible for financing through USDA, which offers no money down, you can put the property address right in there and see if it's eligible.
that is really great information. That's so helpful.
Yeah.
So I want to change the conversation just a little bit because you know, I've joked about this a little bit. It costs to breathe right now, right?
Things are expensive.
Yes, prices have gone up, and I wanted to kind of cover the bases a little bit with maybe help people that are having a hard time saving for a down payment. But let's change the conversation just a little and talk about what if I've got all of my ducks in a row, my credit score is great, I figured out how I'm going to have the down payment, but I'm still worried, I'm still scared that maybe my financing may not go through, or what if the interest rates go up? Is there a solution for that? Is there something that can help reassure me that yes, we're going to get this?
Right. So when we are at that point with our client, right, we want them to feel comfortable with this process and feel comfortable with this home, with that payment, with those closing costs, right? Set those expectations that are very imperative up front. And in doing so, I think the best way is to do the full pre-approval, go ahead and analyze everything. And if you do want to lock in an interest rate, we can do that up front at Prosperity. So we do offer long locks. If we think that that's a good idea and something that you want to do, maybe your closing is a few months out and we anticipate to see maybe a quarter point change in rates. So we have that buyer advantage program is what we call it. And at the time that we pull the credit, get the pay stubs, any kind of documentation that we need to show proof of what we've submitted and built our loan on. We can go ahead and submit that into underwriting as a to be determined address. And I love this because it's so proactive. So basically, we take all your information and we go ahead and submit your loan through to underwriting. At that time, we can lock the rate. And then soon after, we will go ahead and get that loan commitment, which you and I know is super important, right?
It's super helpful out in the field, I can tell you, especially in multiple offer situations. It definitely helps my buyers um, as far as being competitive and having that competitive edge. Like our loan is already fully underwritten. We don't have to worry about it falling apart because of interest rates.
Right.
We're already through that process.
Right.
So, and in my experience, anyways, it has always closed faster with you as well.
Correct.
So,
Yeah. So if we get that paperwork done up front for the loan, which you'll thank me later if you do. It's just great to stay ahead of the game, stay proactive, and then for free we submit that loan, that pre-approved loan into underwriting, and go ahead and get you that upfront lender commitment. And that way your offer is set apart. We're ahead of the game, so we can close, 2 weeks.
yeah,
Sometimes, yeah.
that's great. And I've seen it. I have actually seen us go through and close in 2 weeks.
Right. And it's also helpful with multiple offer situations because there's not every lender does this proactive approach in getting that loan commitment up front. So we pair that loan commitment and upfront underwrite with a closing guarantee, which means we let the seller know that we have done all of the work up front. There's minimal things that we have to worry about. And that sets the offer apart because we're going to guarantee that we close on time, or we're going to offer the seller $10,000. And they like that. They know that it's a sure thing and they feel good about it.
Yeah, yeah, and it's super helpful, like I said. And I want to ask just a little bit more here about interest rates. Because again, it's the conversation at the top of everybody's mind. It's all over the news, headline news, whatever. And so I have this conversation quite often, right? All right. So what if, couple scenarios. One, what if I lock my interest rate with you and the Fed changes midstream and the interest rates drop? What can you do for me? Am I still locked in at that higher rate?
Well, so when you do decide to lock in a rate, you lock in your rate. And we all know that nobody knows what rates are truly going to do. We didn't know that we were going to go into a pandemic. So that is a great example of how we just cannot tell the future. So we can try to guide people in that. But when you do lock, you are deciding to lock your loan. And no matter what the rates do, you like this lock and this interest rate and you feel comfortable with it. So you want to lock. Now, if interest rates go down substantially, then sometimes we can try and renegotiate that lock. But typically, when you lock in, you're locked in.
Okay.
Yeah.
And then here's another question I hear. You know, well, and actually, it's not even a question. It's just a conversation that I have very often with people. The interest rates are so high. I'm waiting for them to go down, and in the meantime, I'm just going to keep on renting.
Right.
What would you say about the renting?
So interest rates are definitely higher than we've seen over the last, several years, obviously. But it shouldn't deter you from buying a home. And the reason I say that is because if you are very hyper focused on the interest rate and you are renting and you're trying to make that comparison, the first thing that you need to know is that your interest rate when you're renting is 100%. A 7% or an 8% or 6% interest rate isn't really that bad comparatively. So if you can buy a home, no matter what the interest rate is, and you're comfortable with that payment, then it is absolutely something that you should do. No matter what, the interest rates are, is you need to talk to someone, get a realistic payment, get some options because you just don't know. The other thing right now with the interest rates is just some different strategies that we're using, to keep buyers buying and sellers being able to sell is just, different strategies than we've seen in the recent past. And one of those would be just an interest rate buy down. So you can do a 3-2-1 buy down, a 2-1 buy down, a permanent buy down. And buying down the interest rate means that you're going to lower the rate, which is going to mean you're going to lower the payment. And so that is a very popular strategy that people are using right now.
Yeah, I personally can say that I've seen that and I've seen it go very well. It's also, in my experience, it's been super helpful for keeping that monthly payment down.
Correct.
And I've seen sometimes sellers that are willing to help the buyers purchase a home by contributing to that rate buy down,
right,
or closing costs.
Right.
Yeah.
Yeah.
Thank you so much for speaking with me today.
It was my pleasure.
Yeah.
I always enjoy talking with you.
Yeah, I love talking with you. And I'll tell you, sometimes when you're out and you're talking to people, at least for me, I share the information, like this is part of what I do. I speak with lenders every day and I share the information from speaking with them, with clients and people that just are curious or questioning, or maybe I can, or maybe I can't. But it's always nice to get it straight from the horse's mouth.
That's right.
And now they have you as well.
Yeah, absolutely. Very in tune to what's going on with the market. Cindy keeps me posted as well. But happy to talk to anybody and everybody about lending, about mortgage, what it means, how it works, who can qualify, what you need to do to get there. If you're trying to do it for the first time, if you're trying to move up, if your family's growing, we try to take care of it all. So anything I can help you guys with is my pleasure.
Thank you so much. And thanks for coming out today.
Sure thing. Thank you.